Hi everyone. Today is November the 6th. It is a Wednesday, and this is the Moneyball Morning Report for the Benzinga Pro platform. I'm going to look at the dailies and the weeklies first through all of the charts, and then we'll go in, and that's mostly because of technical issues that I have on the platform right now. Okay, so yesterday I said, hey, it's going to be volatile, trade light and tight or not at all, and it was a straight grind up, and into the aftermarket it was a straight grind up, and right now we're sitting, for those of us that follow volume profile and order flow kinds of things, we are sitting with lots of single prints below us. But to me, this is a short squeeze, and it's pretty stinking epic, so if I say so myself. So let's look at some measuring, right? We want to find the measured moves in the formation, and we have to think, okay, that mouse is making too much noise. I'm going to use my trackpad. We need to take a look at the measured moves and then say, all right, what do we have ahead? So I don't think the tricky trading is over. It certainly was not tricky yesterday if you just said, listen, I'm going to buy every dip, right? And that takes a little bit of personal bias, and it also takes a fair bit of mental control. So what we have here is this very big rising wedge, as it were, and the range, it's pretty hard to see. So I'm going to use a Fibonacci, and I'm going to just measure the last wave. Okay, so the last wave, the 1.618 is up here at 6,071, and then 62.96 on the twos. So what are we looking at? Well, let's estimate that we've got ourselves a squeeze with all of these single prints here in motion. We have we have jobless claims coming tomorrow, which is not a big deal. The employment situation is much bigger. And we have the Fed speak. Now, my suspicion is the Fed is in between a rock and a hard space. They can't not lower rates, and that forces more liquidity into the market, meaning that dips are going to continually be bought. All right, so ES on a brand new high. Let's take a look at the NQ. Oh, before I do that, I need to draw a line at the 1618. Hang on. Off of this measured move. And then also at the 2. Okay, and we'll leave the rest. Okay, let's go to the NQ. NQ looking a little bit toppy. This looks rangy. So instead of a Fibonacci for now, I'm going to look at the range. I'm going to draw a measured move for the box. So 2025 to 797. Oh my, I'm just going to draw a picture because after last night, my brain is still like jello. So let's clone this. I'm not very good at adding and subtracting anyway. Those people that are able to do that stuff are just amazing to me. The speed. So we're looking at 21,471 for the measured move to the upside. I should probably write that down. I'll put 500 because, that's the big fat round number. Okay? As of now, this is still topping, and we'll see, what's going on in general. A lot of people thinking that this win for Trump is going to be massive for Tesla. We'll see, right? We shall see. Okay, now, so that's what we're looking at. Measured move up to the top. I would normally say, hey, listen, if you get to around 20,800, not a bad idea to try a short there. But I don't know how many shorts are still sitting in the market. I believe this entire move is a squeeze. All right? So here we are. Whoa. Okay, so this one is breaking out to new highs. Now we're sitting at the YM having a peak. The low is holding 41,682. Let's see what the high breach is. 43, did I say 21,000? 41,682, 43,581. You know, we could do, let's just do a Fibonacci for kicks, see what the measured move is. All right, so we are sitting right at the 1.618, and so 2 will be 44,803. All right, that's all the time I have for these. We can peek at oil. The dollar is running crazy. Okay. All right, so for those of us who might not remember, when Donald Trump was president the last time, I think only Grover Cleveland has won non-consecutive terms, but I don't know. I'm not really that good at my American history. We saw a lot of influx into creating more energy efficient and energy reliant resources. And so that's going to force the price of oil down over time if we continue to find ways to get it out of the ground in responsible fashion. And my hope is that's what we'll do. So this, look at this textbook move up to that 72 area. And I said, hey, listen, it's got to get up over this zone. If it doesn't, it's likely to head back down. And wouldn't you know it, that's where it is. All right, so the big question is, can it hold this higher low? My suspicion is no at this juncture. So I'm going to look for the first bounce to see how it fails, and then we might have ourselves a short oil formation that could take us, I don't know, maybe we get back to 54. All right, we'll take a look at gold. Sorry, those are the mowers, and yes, those never stop. Gold pulling back, and I think it's because of what's going on with rates and that sort of thing. Gold is pulling back 2647 to 2608. That is certainly what might be in the picture there. Last one I want to look at is, let's see if we can find Bitcoin futures. Do we have Bitcoin futures? Yeah. So these things, this broke into brand new high, right? A lot of liquidity up here. The Trump presidency has been very pro crypto. And so we'll see how that rises. Here's the low volume node. It's had a very wide range. We want to watch this, but we might add that to the list. Okay, let's now go to our formations. And let's start with, oh, I didn't even do SPY, but we'll do that in 2 seconds. Just want to make sure that we've got these edges. We are well above liquidity. Look at this motion. I mean, savage and literally straight up, folks. This is, you know, I got to eat some crow because I honestly believe the pull bias. And indeed, somebody knew something and off to the races. But my suspicion is still that this is a short squeeze. So, just for grins, I'm going to remove this, of course, after I measure it. But I do want to measure the Fibonacci here from the low up to the high. The 1618 is 59.96. Draw a line right there. And then, come on, Fred. Okay, and then we're going to remove this Fibonacci. Okay, so what are we staring down? A morning that has sort of flattened out a bit. If you're looking and you say to yourself, oh my gosh, what an opportunity. Listen, the market's a buffet and it's open 23 hours a day, and that's going to be good. All right, there are other opportunities, certainly other opportunities. What is the storyboard? Okay, are we making new highs and higher lows? And that answer is no. And that answer has been no for 1, 2, 3, 4, 5, 6 hours. So where's the break? You're going to look for long action above 59.54 and then short action on the failed retest of this area of liquidity right here at 59.15. Okay? VWAP well below all kinds of liquidity here. And again, all kinds of single prints. See how thin this volume is? Very thin volume. So again, I would say, listen, light and tight, light and tight. Look at the long moving average. Remember, that's the trend, and wait for heavy congestion that bounces to get you back into the ring on the long side. Okay, well outside value area high, that's 58, 55. Dips are certainly buy zones. We know we've got 40 points to the north, but we have been on a house of fire. And right down here, near the 58.80s, a monster slew of single prints. And those normally get retested. Now, normally is true, but doesn't mean always. Let's go to the NQ. NQ doing the same thing. Are we making new highs? No. And we haven't been making new highs since the 3 a.m. candle. 1, 2, 3, 4, 5, 6 candlesticks. Are we making higher lows? No. As a matter of fact, we dipped into, look at that midnight candlestick. Holy smokes. That midnight candlestick is crazy. Okay, so we dipped into the open of the midnight candlestick, and then we bounced. So here's the range. 20,594, 20,739. Where's the long? If we pile up and pile up and pile up and pile up here, and we hold the London low at 20,663, we're going to break past here, and we're going to go to the 20,788 to 20,800 area. It is a clear buy the dip zone, big fade, move back. I don't know, maybe we say sideways a little bit, but rangy for now. But the very big dips are going to give us buy zones. You just have to watch for the higher highs getting made. As long as you're sitting in a trend and you look at higher highs, higher lows, you know that you're sitting in a long, and that's going to be the way to go. Let's take a look at the YM. Holy smokes. This thing, is it making higher highs? Well, yeah, the last candle made a higher high. Is it making higher lows? Well, the current candle's making higher lows. The last 3 candles have stalled out at 43,536. That's the floor right now. If it loses it, we're going to head back into the London high, the London low, which is 43,456. And then heavy congestion is not here until down here at 42,954. Again, ton of single prints, a ton of single prints. Gonna be, man, I don't even know that I'm gonna trade the day. I just want to see things settle down. All right, taking a look at the SPY, big dip back into the value area. Of course, it's headed higher, like everything else. Look at where this thing was on, what is the date? Today's Tuesday. Look at where it was on Monday. Below a value area low. And through the day and through the night, giant gap. Will we try to fill the gap? Maybe. Maybe 581. 579 is the volume point of control. Are we making higher highs? No. 590, 50 breaks through there. We could go to 595. All right? Dips clearly buy zones. There are going to be shorts that are going to try to short here. And if there are too few of them, they're going to get run out. And the only way they get run out is by forcing the market higher. Okay? That is just the way it goes. Could we fill in right down here near the liquidity where it's heavy at around value area high 584? Yes. So initially, if you want to take a short up here at 590, you want to start taking profits near that 584 to 585 area. Shorting will be dangerous today simply because of the movement in the market. Take a look here, same sort of thing. Came right into, I don't even know what this line is. What is that line? I don't know. Part of the volume profile, maybe. I have no idea what that line is. Just saw it. Okay, we're above value area high. 2 days ago, we were at the bottom of value area low, all the way to the top. Liquidity up here at 502. Sorry. Allergies. 502. Could you short there? Yes. But the moment that it moves out, folks, it is going to hop higher. You want to be super careful. If you're shorting these highs, they have to move immediately in your favor or you're going to be toast. Okay? Now, if you say to yourself, Anne-Marie, come on now, we got a double top, we got a short, and you see it forming up in other spaces in the market, what do you want to do? Listen, first thing you have to see is, 1, fail to close higher. 2, break the front line of support. Well, the front line of support is here at 498. But Anne-Marie broke on the wick. It doesn't matter. It's where the candle closes. And whether you're trading the 5-minute, the 30-minute, the 1 hour, the daily, whatever, you got to watch for that candle close. The wick just represents volatility inside of the trading minds. Okay? So if you're sitting there and you lose it, you watch for the bounce. If the bounce comes into a lower high, yes, you can short it, or you can take the short underneath that range and then manage your risk in that space. All right? Shorting, I think it could, listen, we could easily turn right over. I have no idea what the markets are going to do. Just watch the levels. See where the traders are saying, I am going to compete or I am going to get out of this race. All right? Listen, that's it for me. Take care. I'll see you at the midday report. Looking forward to it. All the best. See you soon.